Hey everyone, welcome back to Corporate Decoder, the place where we decode the filings of the biggest companies to tell you what is really going on behind the numbers. This quarter, Twilio Incorporated's latest report is painting a pretty interesting picture. Let's dive in. So what do we have here? It is a quarterly report, a 10Q, for the period ending the 30th of September 2025. It is basically a check-in on how the company is doing financially. Twilio, the company that powers a lot of the behind-the-scenes communication for businesses, sort of like the secret sauce that lets your favorite app send you texts or make calls. First up, let's look at their balance sheet. Think of this as a snapshot of what Twilio owns and what it owes at a specific moment. As of the 30th of September 2025, their total assets were around $9.7 billion. Not bad, but down a bit from almost $9.9 billion at the end of last year. On the flip side, their liabilities, what they owe, also went down a bit from about $1.9 billion to roughly $1.8 billion. That is a good sign. Stockholders' equity, that is what is left over for the owners, also saw a slight dip from $7.95 billion to $7.9 billion. Now, let's talk about the money coming in. For the 3 months ending the 30th of September 2025, Twilio brought in about $1.3 billion in revenue. That is up from $1.13 billion in the same period last year. And for the 9 months, so the first 9 months of 2025, revenue hit a whopping $3.7 billion. A nice jump from $3.26 billion in the same stretch of 2024. This is good news. It means people are using their services more. Their gross profit, which is revenue minus the direct costs of providing their services, also went up. For the 3 months, it was about $632 million, up from $578 million last year. For the 9 months, it jumped to $1.8 billion from $1.67 billion. This shows they're managing their core costs pretty well as they grow. But when we look at income from operations, things get a bit more mixed. For the 3 months ending the 30th of September 2025, they actually made a small profit of about $41 million. That is a big turnaround from a loss of nearly $5 million in the same period last year. However, for the 9 months, they still ended up with a profit of $101 million. But this is compared to a loss of $67 million last year. So progress, but they are still working towards consistent operational profitability. One thing that always adds up is stock-based compensation. For the 9 months ending the 30th of September 2025, this cost them about $446 million. This is money paid to employees in the form of stock or stock options, which is a common practice for tech companies to attract and retain talent. And finally, the bottom line for the 3 months in 2025, Twilio actually reported a net income of $37.2 million. That is a huge improvement from a net loss of $9.7 million last year. For the 9 months, they turned a big loss of $96.9 million in 2024 into a profit of $79.7 million in 2025. This is a significant shift. Now, let's look at the shareholders' equity. The number of shares outstanding has decreased significantly. For the 3 months ending the 30th of September 2025, the weighted average shares for basic EPs was about 153 million, down from 159 million in the same period last year. This indicates they've been buying back their own stock, which can sometimes be a signal that management believes the company is undervalued. Let's check out their cash flow. As of the 30th of September 2025, Twilio had cash and cash equivalents of about $734 million. That is a lot more than the $421 million they had at the end of 2024. Their investing activities brought in $221 million, largely from selling marketable securities. And their financing activities used up a lot of cash, about $650 million, mainly due to repurchasing their own stock worth over $670 million. Looking at fair value measurements, Twilio holds a lot of marketable securities. Total financial assets value is over $2.2 billion. Most of this is in debt securities like US Treasury securities and corporate debt. These are generally considered safer investments. Now, a big part of their expenses is cost of revenue. For the 9 months in 2025, it was $1.8 billion, an increase of 10% from the prior year. This is mainly tied to higher network service provider costs, which includes those AP fees we've talked about before from major carriers. Their total operating expenses, which include research and development, sales and marketing, and general administrative costs, actually decreased slightly for the 9 months, down to $1.7 billion from $1.74 billion last year. This suggests some cost control efforts are paying off. Despite the overall dip in operating expenses, research and development spending remained pretty flat, showing their commitment to innovation. Sales and marketing also saw a modest increase. General and administrative expenses saw a notable decrease of about 9% for the 9 months. This was thanks to lower professional services, fees, and other costs. Twilio also reports non-GAAP income from operations, which excludes things like stock-based compensation and amortization. For the 3 months in 2025, this non-GAAP income was $234 million, up from $182 million last year. This is a much healthier picture, showing their core business operations are performing strongly. Their free cash flow, which is cash generated from operations after accounting for investments in long-term assets, was solid at $199 million for the 3 months, up from $189 million last year. This indicates they are generating good cash from their business. Let's break down revenue by geography. For the 3 months ending the 30th of September 2025, US revenue was about $830 million and international revenue was $470 million. The US still makes up the majority, around 64% of their total revenue. Now, let's talk about the risks. Twilio operates in a very competitive and fast-paced market. They acknowledge that the markets for our products continue to evolve and may decline or experience limited growth. This is a standard risk for tech companies, but it highlights the need for constant innovation. Cybersecurity is always a big one. They mention risks like breaches of or incidents impacting our networks or systems, or those of our third-party service providers. Given the nature of their business, handling sensitive customer data and communications, any security lapse could be devastating. They also have significant net operating losses. They state our ability to use our net operating losses and certain other tax attributes to offset future taxable income, and taxes may be subject to certain limitations. This means that even though they've been profitable this year, they might not be able to fully use those past losses to reduce their tax bill, which could impact future tax liabilities. Then there are the regulatory hurdles. Being in the telecommunications space means they are heavily regulated. They mention our ability to comply with telecommunications related regulations, and the impact of future legislative or regulatory actions could adversely affect our business. Staying on top of these ever. Changing rules is a constant challenge. So, what is the verdict on Twilio's latest report? On the bright side, they are showing real progress in turning losses into profits. Revenue is growing steadily, and they seem to be managing their core business costs better. The buyback of their own stock could signal confidence from management. However, it is not all smooth sailing. The reliance on usage-based revenue means they are still sensitive to economic downturns. While they are making progress, operational profitability is still a work in progress, and the significant net operating losses carry future tax implications. The constant need for innovation and managing regulatory and cybersecurity risks are also major challenges they face. Overall, Twilio appears to be navigating a complex landscape with some success. They are growing and showing signs of true profitability. The key for them will be to continue innovating, manage their costs effectively, and stay ahead of the regulatory and security curves in the rapidly evolving world of digital communication. Alright, that is our breakdown of Twilio's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.